Looking at the markets at the end of reporting season and wondering how much further can they go? The charts look like possibly only a couple of weeks, and we're going to look at that in a bit more detail with Gary Glover, as well as the best trading opportunities that he's looking to add to the portfolio, because there are some value opportunities there with the backdrop of understanding how momentum leaders come about and the foundations grow. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Good.
We've got this week's report. We're in March now. February reporting season behind us. We've got large dividends coming to the market in the next couple of weeks. Huge amount of cash, actually. But when you're looking at the portfolio, you've clearly got, we'll have on screen share just here for those who want to scroll through and see your recent positions. You've got some that you've added. You've talked about financials and growth being rather expensive. Looking for the hallmarks of inflationary environments to see assets, real assets, hard commodities, soft commodities sort of come to favor. But before we get to the individual components and trading shares that you're looking at, just to check in on the indices, you've got the NASDAQ Composite Index. Last week does show up as a heavier candle once more, but still, is it still conforming with that blueprint that you're looking for, come down towards that channel and where the arrows on the chart show?
Yeah, look, it has actually already broadened out, Chris. I did sort of go to a slight new high, and now it sort of has broadened out, marked a slight new low, just in terms of how we're swinging lately. So that's kind of our minimum requirements there. Do like the chance of sort of maybe just coming back a little bit lower here, back to this channel. Yeah, still feels a bit early here in the correction wise. Still feels like we've got a bit further to go. And I think I think the Dow Jones has been a really good leader here, and probably just the one that's sort of been a stronger guide here. So definitely looking at that. In terms of maybe, I really do think that is going to come back and retest that last low, go slightly lower. So it was actually interesting to see that was off the most last night. So just good there, because it's sort of making that target a little bit closer there as well. So I think we'd go a little bit lower here. But yeah, definitely want to sort of see something along the lines of sort of 41 and a half on that down there. That's just I think it's just a bigger level there, man. Ideally coming back to that 41,000, which would be that 50% or 150 expansion there. That would be a really nice and tidy sort of price zone to sort of come back to, just because, we're sort of we have been expanding those sort of ranges across all the indices actually. So so coming back to that 50% that would be the sort of perfect sort of kind of level to start building again from. So whether that's sort of mid-March or late March tonight, or even about early April there. But I think we saw there. I think the S&P 500 there. I've actually put a lot of the dates of the lows on there, because there are just so many in that March window. There's a few do push out to May there, but I think the big one there, you got 14th of March, 15th of March there. So that's 18th of March. So that window in time there, be watching that window pretty closely there. If we see, if the levels come back to those key zones there around that timing here, that's when you could get a bounce there. So interesting thing about the March is that it's we always get a March bounce, Chris. That's we go back the last 100 years there. So probably 70-80% of the time we get a deep sort of a deepish pullback into March, April, and that becomes the low for the year. In the sort of maybe the 20-25% of when it doesn't be the low of the year, it's the low for the first half. So if it does get exceeded, it doesn't generally get exceeded until the second half of the year. So so we see a bounce of sorts here anyway. From March here, but it just needs to come a bit deeper here. I think this correction needs to sort of cool off there. We've had a great run here the last couple of years, so I just think it's we definitely want to see a bit of a cool off there. And I think really those growth stocks and the financials really probably the two most expensive areas in our market. So I just need to see those sort of cool off a bit here. So I think we're starting to see that. We're definitely showing quite a few sort of shooting star patterns in the last few weeks there, but we're definitely seeing some more signs of distribution from those, from the leaders there. So, I do expect them to sort of cool off here.
Well, if you look at the leaders cooling off, we've seen CommBank report, we've seen the other three banks give an update. So the financials still relatively strongly priced. And then you're talking about the growth. We have seen some hits. And like you were saying last week, if they've reported anything less than stellar or outstanding results, what happens when you price to perfection is that they get hit pretty hard, particularly if the outlook's not so great. And you mentioned last week a fair few companies that had reported what seemed to be sort of on par, but not stellar, outstanding forecasts get hit pretty hard. NAB was hit pretty hard, just one of them, but a fair few others were as well. That's going to be showing up here in these charts. So if you're looking at the Aussie, you're talking about this sort of rotation and what's happening. We are now outside of that range, that sort of channel or wedge that we're coming into.
Yeah.
But it's still coming towards that target. So the statistics that you showed before on the S&P 500 chart with the S&P lows, obviously it does factor into the Aussie, but we can dance to a different beat here. Are you still seeing this sort of be the magnet pull back towards this March, April area that's low around the same sort of time for the Aussie?
Yeah. I still did see that broadening pattern occur a lot. You know, I mean, it occurred almost occurred so much in the US, particularly the S&P 500 there, but it did occur a lot on the XJ as well. So we did tend to sort of broaden out in that first quarter there. So just normally sort of saw in the 50 years there that sort of a weakness in the first quarter, a bit of a broadening sort of type of pattern there, and then a recovery up to there. So I think, yeah, it does look, the Aussie market looks pretty similar. I mean, we have basically expanded, that 100% of that previous sort of range there. And yeah, so I don't think we'll sort of come back to the 50% level. I think that's probably too deep here. So I think we actually held up pretty well. So considering, the insurers fell about 10% or some of them were off 15, 20%. And we saw some of the banks off 10% as well here. Index has actually sort of held up pretty well. I think you're seeing other sectors sort of stand up here. So yeah, I think we just go a little bit lower here, Chris, but yeah, just want to go maybe sort of just maybe just under 8,000 there or something would be probably a nice level there. Yeah. So to see how we're trading around there, the zones, it's, it's anything there, even looking through some of those US markets there. I noticed that, yesterday we had a pretty decent bounce, Chris, and the volume was actually up on that bounce. And then obviously last night we get hit pretty hard and then it's down. That the volume's probably not quite as hard. So actually, every time the market pulls back, we actually are seeing some signs of actually buying there. It's not like you're sort of seeing a lot volume bounce there. I know we're seeing volatility, so we are going through levels. So when you have wide range, the volume should be up there, but we're definitely seeing just as much buying on the up days, if not more, when the market's pulling back here. So that's sort of encouraging anyway, from what I can see here. So yeah, I think we'll pull back here a bit further, but yeah, I still don't see anything too large there. We just don't typically get big corrections in those sort of 50 years or post-election years. So just need to see a bit of a cool off, a bit of a broadening pattern there. So just might be messy there for the next 2 to 4 weeks. But yeah, we'll just get a trade lightly here for a little bit longer here. But I think hopefully we'll start to see some new leaders emerge or some sort of stocks sort of show some relative strength there, and that'll be pretty interesting to sort of see who they are.
Well, one candidate or possible candidate that you got in this week's report, we jump down into the individual shares. We've got Ramsey Healthcare. So if we see that rotation, definitely a prime candidate to troll off the bottom and can climb quickly. Percentage-wise, definitely. Index points becomes harder as the larger ones like Commonwealth Bank consume more of the index and Ramsey would shrink. But nonetheless, as a group, if we see that rotation happening, there can be more participants in that or more breadth in those climbing back up the right side of a base. What do you see happening here with Ramsey?
A couple of things there. Saw actually some positive research reports out for Ramsey, which sounds odd. So we haven't had many of those for quite a while. So quite a few analysts were liking what they saw in the last report, and I think obviously getting looking to divest their kind of the troubled French asset as well was sort of well received as well. So there's just some I still saw a few analyst reports there quite happy with what they saw in there in terms of the Australian operations, but also looking to divest some of the trouble stuff there. So I think the market's been calling for that for quite a while here. So, good. Yeah, got a new CEO there. Obviously, a few changes on the board. So, looks like that they're starting to move in terms of what the market's after there. So, did see a bit of a pop there. But I think the most interesting thing there was some massive lines going through on the stock last Friday. I think there was roughly about 8% of the company traded in a single day. So that can be a sign of exhaustion there. Maybe change of hands as well. So yeah, I thought that was really interesting there. Hasn't been disclosed yet who or what, Yeah. But yeah, just interesting here. So it's definitely one to sort of keep an eye on here. So as sort of just still floundering here, but just saw a few things there which sort of said this should be just maybe go on the radar here. I'm just looking for maybe, I'd like to sort of see some little tightening pattern and just maybe some sort of low risk entry there, but definitely sort of going on the radar there. Just seeing a few healthcare names sort of obviously come off quite a bit here. I think a few of the CSL and Cochlear are under a bit of pressure there. So maybe they've got a bit further to go here, but just the segment there, I think, is probably one to sort of keep an eye on there. Just a few names sort of just start to show a little bit of strength there, sort of hold up better than market. So, yeah, definitely a section to watch.
Well, one to watch, and indeed with CSL and Cochlear off as much as they are, but still a lot of market retail traders and institutional interest on it. Karoon Energy, so the old Karoon Gas, that chart has been coming down. You did mention before that we've seen sort of with Woodside an inverse movement. We're seeing these gas prices at exceptionally high, historical high prices, but some of the ASX listed companies aren't really reflecting the underlying commodity. Kind of the opposite to what we're seeing with copper. So what's caught your eye on Karoon here?
Just had a nice sort of deep low there, a bit of a descending wedge, and then sort of that's kind of signs of exhaustion of the low. And then since then, you've had a reasonable bounce there. The volume's been solid without being awesome there, but then has sort of pulled back here again, and then we've just sort of bounced again on pretty good volume again. So I thought, okay, we're still actually starting to see a few more participation in this sort of upward rally here. So again, I was sort of like, well, it'd be nice to sort of see this one tighten up a little bit as well. But yeah, just some sort of, some kind of constructive signs there. I think, yes, some of the metals there and the minerals space there has sort of been pretty weak here. Well, while actually some of the commodity prices have actually been pretty buoyant. So I think there's some sort of scope for upside there. I think BHP and Fortescue both sort of cut their dividends slightly. So it's just had a slight negative there, but still a bit of value for those companies there. And I think some of the other sort of stocks in the segment as well are pretty interesting here. But yeah, just interesting to see if we can sort of see these show some strength here while maybe the market's weak here, and maybe they can sort of come out to the side. But these are the ones that so far just sort of seeing a little bit of some early strength there while the market's been weak here. So just showing a little bit of relative strength there.
Well, one that's definitely shown significant strength from a high beta perspective. Market proxy, market goes up, funds under management, assets under advice, and assets under management all increase, and that goes positively when the market climbs. And then often we'll see something like Netwealth for HUB24. They have a higher beta than the market. What are you seeing here? We've you've got a nice horizontal line which shows to be overhead resistance. We got thrown back, we're able to crack through it, not maintain, and then under the intraday high, sort of compress and coil. But then you've highlighted a day here where it's shot up significantly with decent volume, but then been thrown back and failed there. So is this kind of similar to false break territory? What's happening?
Yeah, obviously kind of extended move there, but does look like a sort of classic sort of fourth wave set up there. And then we go to a fifth wave sort of marginal new high. And then was, really like a little false break here, sort of, go to a new high, then fail. And it was in the last couple of weeks, we've definitely seen the volume increase here substantially there. So it's definitely seeing signs of distribution there, selling off from those highs there. So, if you drill into the daily there, there's some really, I think those 3 really heavy down days there in a row there. And we've just seen an increase in selling here after sort of, this sort of run here. So just like we saw the same thing with Hub there a few weeks back. We've just seen quite a few of the leaders all sort of put those sort of big, shooting stars where they sort of, exploded on, maybe some good news updates and stuff there, but then he was definitely seeing signs of selling into that good news. So, it's probably not so much that companies aren't doing well. It's just, when you start getting to like, 50, 60, 100, 200 times earning, it's sort of, it does that you are sort of getting pretty elevated for some of those companies. So just seeing plenty of good companies, but probably just the fact that they're up maybe 100, 200, 300% here over the last, year or two as well. Just some big gains been made there. So I'm just seeing clear signs of distribution taking place on some of those leaders, Chris, there. They're all at the same time here. So see the US market breaking the 21-day and the 50-day for a lot of stocks as well. So just seeing some pretty clear sort of signs of distribution here amongst the leaders there. So just seeing a few more there. I've got a few stocks there that all kind of all quite similar really. They're all sort of been leaders there, just all showing signs of some selling, some distribution there on the downside.
Well, we're not seeing Netwealth being alone in that movement. Maya, well, look at this chart. I'm going to say it's almost identical. I had a double take on it, but just what you said, it's sort of coming up there, trolling back a little bit, trying to get through a new high, and then
we're on main there. She should be Promedicas, that one. So but yeah, again, this thing's, I thought this might have actually peaked there a few weeks back. But again, it just sort of congested and then went to a new high there. But again, we're just seeing, really sort of, signs of strong distribution there, seeing some really heavy down days on the stock here. Definitely increase the volume there. And I think that sort of stock there, if you look at the daily there, I think it stayed above the 50-day moving average, Chris, since like August this year. So, literally, I think it's the first time it's broken the 50-day in about 6 months. And we've broken that on some pretty heavy selling as well. So I know, IBD founder there, sort of Wemo now, that he'll be long those leading stocks until they break the 50. So we've seen a clear break on pretty heavy selling there. So again, just clear signs of distribution there. So just got to be cautious there. We know once these leaders are done, the corrections are always pretty substantial there. So we probably just some thinking we'll just get a normal pullback here, but this one looks significant to me. Just seeing classic exhaustion signs there, classic selling. So just some decent breaks here. So just definitely got to be super cautious with those sort of stocks here. I think the correction there might exceed a lot of people's expectations there.
Well, that did happen before with Drone Shield, and like we said with the 50-80 rule, if anyone wants to learn more about that, there's a whole playlist of training education. Gary shared those kind of insights. A solid pullback is on the cards with high growth movers like that. Telix Pharmaceuticals, another one in that space, and I'm looking here at the moving averages, been sitting nicely above that 20-week moving average, green line in here. And then if we have a look, there's it's been pretty steady with its rise, so it's hard to see what you've drawn here. But this looks like the first ascending trend line, the second ascending, the third, and then we're getting a bit faster here. And then, well, if you want to draw another one in there, maybe a fifth. So are you seeing that ramp up and catch your eye from that perspective?
Yeah, seeing a bit of distribution here again. If I'm not mistaken there, Chris, I think the CEO sold a few shares as well. So always a reasonable marker. But yeah, again, we've had a terrific run here. This is probably not showing hasn't broken the 50 there yet on the daily and stuff there. So still in a reasonable position there. But yeah, definitely just seeing, probably sort of slightly earlier signs of distribution there, but just some caution here where we are. It's the fact that all the other leaders are all breaking down, Chris. So just, I know someone might be able to hold up here a bit longer than others, but once they all start breaking down, it's not many that don't follow.
Yes, and another leader that we were talking about again last week, saying that I remember buying a client back under $5. They've done very well with that and wanting to sell here at $80, but it's gotten quite volatile. Once it's cracked over 70 and pushed through,
Yeah.
The weekly ranges have been getting pretty wide. And then as you've noted here, 2 weeks with decent volume in selling. Definitely not the highest that it was back here, but remembering in this lower period, the share price was literally half of what it has been trading up here. So
Yeah. So I mean, like the last rally alone there has gone from sort of 40, like the last acceleration point, 40 to 80. So that's literally gone over 100% there in what 9 months this month. So yeah, it's a pretty good. But you've just got that again. You got that sort of shooting star sort of set up there, and then you've got sort of selling follow through as well. So yeah, look, the only plus is there they do still have a little bit of an on market buyback going on, so that'll probably be a little bit more supportive of it. But definitely seeing that, even with the buyback on, we saw that really get hit pretty hard the last couple of weeks there, and pretty heavy selling as well. So again, I think you'll pull back. This one's probably held up a bit better. It hasn't broken the 50 yet, but yeah. So it's funny. I actually would have shorted this one a couple of weeks ago, Chris, but because it's got an on market buyback, I just don't like. They tend to sort of that results in the stocks staying a little bit stronger than others. So
a temporary false floor that can hold it.
Yeah. So it can sort of stop it from having those sort of bigger corrections there. So that's probably the plus there. I still seeing lots of those sort of leaders there just showing clear distribution signs. So I think it will come back deeper here, but this one, the on market buyback might just sort of slow down that correction there. Maybe this one, will be a bit more tempered there.
Okay, with just a final note, circling this all in, you're looking at the market leaders, you're concerned about shooting stars, the volume, the distribution days coming out at the top, the later part of these cycles, after third, fourth wave or third, fourth sending trend lines. So the hallmark is that the trend can be coming to an end. But if we tie that in at the start, wherein you said, look, we quite often see March lows. In your experience with seeing lows, relative outperformance and momentum, is that the type of event where you could see it transition to have new leaders come to the forefront and then take the market higher? Does that fit in with that rotation and new leaders that you look for?
Yeah, it should do. Not everything will be in tandem there. We sort of definitely seen some sectors, rotate, lower there while the market's bouncing there. So we might tend to get sort of waves there. So we kind of want to see, I just still view those sort of financials being a little bit expensive, even though they've had a decent pullback here now. Some of them have come off, quite a bit there, but I still think we'll see a bit deeper from those. It's still, in terms of long-term value, they're still sitting pretty high valuation perspective. So I'd like to see them come up at least another sort of 5% there. And we've just seen so many fast pullbacks as well, Chris, as well. We saw those sectors move pretty quickly. So this is a market there where we're not going through, like a 3-month or 6-month bearish phase. We're just we're getting it's almost like a reset, and I've noticed in these sort of cycles as well that the reset's usually sort of something between I think 30 days or 45 days is about as long as a reset would be. So I think we're going to pull back here. It's going to happen. It's not going to happen over the longer haul there. I think it's going to adjust pretty quickly. So, so I think once these stocks are sort of pulling back here, I think we just might have a quick reset there and then build again. So that ideally we come back there, you'll see new leaders emerge, and they'll do a little bit of the heavy lifting while the other or some of these more expensive sectors sort of find their way a bit lower. And then the new leaders will lead first. Maybe the other stocks will be laggards as well. And may even actually, while the leaders are making high lows, those laggards might be making lower lows as well. So yeah, that's normally what occurs at all those sort of key market lows. So we're just going to be looking out here over the next probably 2 to 4 weeks. There we're going to be looking closely at seeing what sectors, what stocks sort of within those sectors hold up the best there. So that should be our new leadership group there moving forward there for the, maybe for the second quarter of this year.
Absolutely. That's a solid insight. And for more of those insights, like what you studied with the model book, we'll put on the right-hand side one of the model books to understand those market leaders and how and when they do make new highs before they become the next dominant theme. Thank you very much, Gary Glover from Novus Capital.